and an A+ with the Better Business Bureau. You don't need to be afraid of the IRS any longer. End your tax nightmare today by visiting us online at TRA.com or call 800-583-5795. That's 800-583-5795. Tax Relief Advocates. Real solutions for real people.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is WBNW, 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide out this month titled Building Your Emergency Financial Binder. And really, Mike, we're talking about, a set of documents that someone needs in the event that something really bad happens to them. And one of the questions that family members and friends always ask is, who should I call if that happens? And this binder should have that information in it.
Yeah, it's designed to be that one-stop shopping of, hey, what do I go for? Any number of different things that could happen, right? I mean, it could be an accident that lands me in the hospital. It could, unfortunately, be my passing. But you want a consolidated place where loved ones can go to try and find, hey, what are my first points of contact that I should make?
What are those points of contact that should make their way into this binder?
Well, I think importantly, tax preparation, estate planning, and financial advice are three of the big ones that I can think of off the top of my head. The problem is who does that and how spread out it is varies dramatically person to person, right?
Sure.
If I have 5 different bank accounts for different things, that is going to be more complicated than if I have a single bank account at a single place and then an investment advisor that's overseeing all of the investments. But again, your results could vary.
Folks, the guide this month is titled Building Your Emergency Financial Binder, and it has all this information and more in it to make sure that you are leaving a comprehensive guide for what happens if you're going through an emergency. Way to get this guide? Call 800-393-4001, or you can also request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Good morning, happy Thursday, and welcome back to the Financial Exchange. I'm a little amped today for the program. I feel as though this is the first day that war in Iran is not the leading story. We've got a lot of breaking stuff to go through. It is the middle of earnings season, just the beginning of earnings season here. Bank earnings have largely come through. We have the largest and really only important semiconductor manufacturer that reported earnings this morning, so a little bit to say about the AI industry. Netflix will go this afternoon. Pepsi, Abbott Labs, Charles Schwab all reported this morning before the bell. We got weekly jobless claims. We've got rumors of a major airline liquidation and probably my favorite story of the day, a blast from the past footwear company bravely jumping into a new business line. So let's kick things right off here with the weekly jobless claims that were released this morning at 8:30. Didn't find much here to be concerned about. The advanced number of actual initial claims under the state program. So again, this is a weekly report that we get. Every state tallies up all of their initial claims for unemployment, and they report them to the Bureau of Labor Statistics, who then puts them all together and reports them out. We saw 213,873 for the week last week ending April 11th. That's an increase of about 12,000 from the previous week, and not, in my mind, not rising enough to the level that we need to be immensely concerned about here. And so, by and large, there are plenty of concerns out there to be had about oil prices, about, layoff announcements here and there. But the reality is we continue to get data point after data point indicating that not only is the labor market tight because of a general lack of supply, but that in the aggregate, concerns over layoffs are probably overdone, and we are not seeing much in the way of concerning levels of unemployment. So that's the main take there. And I don't think much more to add on that. We will have, obviously, more data points coming out about the labor market. We've got some Fed talk as well, as the Senate confirmation hearing for Kevin Warsh is going to be taking place pretty soon. And so there will be more talk about this because Kevin Warsh has been very vocal, at least when he was looking for the job, of wanting lower interest rates once he gets into that role, and citing concerns about the labor market. It's now been several months since he's had to speak on the subject. You've heard absolutely nothing from him since the oil price shock of early March. And so hearing, some back and forth on there. The majority of the questions are and probably should be about Fed independence that he will be hearing, but there are some interesting questions to ask about, hey, your perspective at the second half of last year was that rates need to be dramatically lower. Can you still justify that opinion as we head into the second quarter of 2026? So initial jobless claims, nothing to be worried about there. The S&P 500 continues to, not this morning, but over this week, surge higher. We crossed that 7,000 threshold earlier this week. And on, Tucker, was it Friday or Monday that we surpassed the February 27th high before the Iran war?
I thought it was yesterday was the all-time high.
All-time high might have been yesterday,
okay, gotcha.
Surpassing the pre-war level on the S&P 500 was sometime before then. But yeah, we are sitting very close now to all-time highs, and this is fascinating to me for a few different reasons. One, you clearly have investors looking past the events in Iran, the oil price shock, and everything else, and focusing on what they believe to be good news regarding the state of the American economy, the state of the AI trade, and other. But we now have made up and then some the losses in markets from the oil price shock, and seem to be just competing higher as investors digest earnings. Chuck, anything to add on just state of markets as we sit here in the middle of April?
They're high.
How do you measure that? What do you mean by they're high? Because, honestly, they are, at pretty high levels. They also haven't really gone much of anywhere since, October, November of last year in the aggregate. I think they're probably up a couple percentage points from that point in time.
Well, I think the interesting way to look at it and the interesting way to frame it is, look, for basically the 6 months of, early October through late March, early April, you basically saw a lot of the stocks that have been driving things in the post-Liberation Day period, the AI trade, they couldn't get out of their own way. They were trying to figure out, where to go. And we've talked about this before, where when market leadership faltered and tried to, broaden out to new companies, it hasn't worked very well the last few years. Sure. This was another example of that. The run that you've seen for the last 2 weeks now, like you take a look at it, the S&P's rallied about 10%, maybe 11% from its low at the end of March. If you take a look at where tech has gone over that time, tech has rallied about 20%. So it's that former leadership is now kind of picking up the mantle. And so the question is very much going to be, hey, is that something where there's another leg to this where it can continue to move? Or is it going to be something where, this runs out of steam because there's just not enough juice there still? So I think if you're looking at this from the context of, hey, what does this mean for the broader market? Look, markets can run on narrow participation, but there have been questions about that AI trade for the last 6 months. I'm not sure they've been definitively answered in the last couple of weeks. I'm not sure anything's been answered there. But in theory, you've got a situation where you've got some potential now for this market to move based on that. And the other thing that is interesting, remember, I talked about this yesterday, because you've gone 6 months with these stocks basically treading water, their earnings for the next 12 months have moved up for 2 reasons. The first is that next 12 months is now 6 months further ahead. And so if earnings growth is, projected over any, just sequential quarterly periods, you now have higher earnings projected than you did 6 months ago. For the S&P, just broadly, you've gone from next 12 months earnings projections from about $305 to about $339. This is according to Yardeni Research. So even though stocks are at the same place they were at 6 months ago, the multiple on the S&P 500 has gone from 22x down to around 20.5x. So stocks have gotten cheaper in relative terms through higher projected future earnings. So this is what Mark Vendetti and I were kind of talking about yesterday, which is, if you believe, there's a lot of ifs, but this is the path to stocks continuing to go up. If you believe that there is going to be improvement in the Strait of Hormuz in the next 14 to 21 days, And if you believe that last year's multiple of 22x on the index is an appropriate multiple in today's market conditions, then you've got another 7 to 8% upside in the S&P 500 from that.
Sure.
The downside risk is if the Strait of Hormuz does not, show meaningful improvement, and as a result of that, plus other factors, if that 22x multiple is too high and projected earnings are too high because of that, then you've got some significant downside that still needs to be repriced. But this is kind of always the case with markets. It's just a more acute, easily point-outable situation that we have now. And so I think those are your two cases that you have for this market right now, which is, number one, you can return to last year's multiples and the straight clears, and you've got a path into mid 7,000s on the S&P 500. If not, then you've got some downside that markets are going to need to sort out based on supply disruptions leading to production disruptions, leading to earnings disruptions.
Yeah, there are multiple paths, and as we've said from the beginning with the events in Iran, I guess what we've been saying from the beginning is that what matters is the flow of traffic through the Strait of Hormuz. But being such a binary set of events controlled by such a limited group of people, it is particularly difficult to put a value on just where things go from here.
It is, and I think ultimately it's going to be one where the market right now is pricing in, yep, this is going to get sorted out, and even though there's this air pocket in energy markets, okay, that air pocket will be there for a couple months, and then there won't be any lasting repercussions. That's what the market's pricing in now. Yep. And as I said yesterday, look, the great thing about markets, if you disagree with that,
place your bets.
You can go and put your money where your mouth is. If you agree with it, you can do that too. So it's not to say one is right or wrong. I mean, eventually one will be proven wrong. Those two views will not exist at the same time. There is no path for Hormuz to remain closed for 6 months and have no disruption to S&P 500 earnings.
Agreed.
That's not possible. There is a path where if things resolve, in the next few weeks, yeah, especially with so much of S&P 500 earnings being driven by technology now, yeah, you can get there. But it's also, okay, is that AI trade going to be disrupted? Will the questions that it's been facing for the last, 6 months return? Those are, other variables out there. But they're all secondary right now to how long does Hormuz stay closed? Because right now you're at the point, the best case scenario, we've now gotten to, there's going to be somewhere around 1 billion to 1.2 billion barrels of production that ends up offline because of this. And it's being felt now. I mean, I'll put it this way. The Australian, I forget who it was, but a senior Australian politician just announced that they had secured 10 million liters of diesel. To put it in perspective, that's basically 1 day of Australia's diesel usage. When they're making announcements like that, it tells you that things are getting tight in other parts of the world. It's not tight here right now. I understand that. But there are other parts of the world that are starting to get a little bit tight, and that's going to become more apparent over the next several weeks as we go here.
Let's take a quick break. When we come back, continue discussion on earnings, in particular TSMC, Taiwan Semi, reporting earnings and giving a quite bullish outlook on the AI industry. That's next on the Financial Exchange.
Market insight, retirement strategies, real talk about Wall Street and economic trends. All live every day on our YouTube channel. Go to youtube.com/The Financial Exchange Show. This is The Financial Exchange. When it comes to leaving assets to your family, simplicity isn't always the best approach. Cushing & Dolan are experts in elder law, and their new guide is called How to Leave Assets to Beneficiaries. Adding children as joint owners on accounts or property doesn't guarantee you can avoid probate. It may create serious unintended consequences. In this guide, you'll learn why leaving assets to your children may not always be the best plan. The guide also explains how trusts can be used to stagger distributions over time, help protect assets from creditors or divorce, and ensure your family receives your inheritance in a way that makes sense for your personal situation. Call 866-848-5699 right now and ask for your free guide, How to Leave Assets to Beneficiaries. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
One of the most helpful things you can do for your family is to make sure that important information about your life is organized and easy to find. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Financial accounts, legal documents, and insurance policies are all part of a complete financial picture. When that information is scattered in different places, it can be difficult for loved ones to step in and help if a crisis occurs. Our new guide, called Building Your Emergency Financial Binder, will show you how to organize the most important details of your financial life, including key contacts, retirement plans, investment accounts, and insurance information. Call 800-393-4001 and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
If you missed any of our shows this week, you can go back and find them on our YouTube page. We stream the show live every day on YouTube, but also archive every hour of every show. So go to YouTube, search for the Financial Exchange, and be sure to hit that subscribe button.
Chuck, one of the largest companies in the world and arguably most strategically important to the AI build-out industry, Taiwan Semi, reported earnings this morning. And I'm trying to think of like where you place their earnings in terms of order of importance for the direction of the AI industry. I can't imagine that I would consider them a leading indicator of anything, but without their successful production, you have no data center build out. So obviously a critical component of everything. What did we hear from them that was of note to you?
Well, I think that when you look at it, again, earnings were really good. They guided towards the high end of, their guidance going forward. Their gross profit margin was the highest level in 20 years. So basically, like what they're telling you is, hey, we're getting these crazy levels of orders still, and a lot of it is driven by AI demand.
Sure.
As an example, their smartphone business was down 11% sequentially, quarter over quarter, actually. And so it's something where they're telling you, yes, these orders are still coming in. Ultimately, I think they're 2 levels removed from where you would see the question show up, in that it's going to be, okay, big hyperscalers, your Microsoft or Amazons or Googles of the world, they say that they're going to cut back on spending. NVIDIA says we're going to cut back on orders, and Taiwan cuts back on production. That's where like it would actually flow. So I don't think you're going to get anything early there. But what it is telling you, and this is not surprising based on all of the CapEx guides for this year, is yeah, they're still selling as many chips as they can. They still have plenty of demand, and there's no change there. But I don't think any of us were expecting there to be a change, Q1 of this year, based on, what we've heard from the AI companies.
The obvious question they were asked during earnings was about the Strait of Hormuz and supply of all sorts of different raw materials. They made the point of calling out that they have a diverse procurement channel for helium and hydrogen and nat gas in order to continue production regardless of the situation in the Strait. But what seemed to be acknowledged but uncomfortable subject was just electricity on the island of Taiwan, and how much nat gas supply the government actually has, and what would happen. I guess the question would be, how long can Taiwan continue to operate given the closure of the Strait of Hormuz? I'd be willing to guess that very few importers would be willing to pay more for energy supplies, and so from that perspective, they might be able to lock in something from somewhere. But they're not China. They do not have 6 months worth of energy reserves sitting in a strategic petroleum reserve somewhere.
No, and this is why, again, if you look at the market, why it's kind of doing what it's doing. It's basically saying, look, as long as you can, get the Strait of Hormuz reopened shortly, we're willing to look past any kind of short-term blips that are there, as dangerous as that can be. But over a longer time horizon, it becomes more and more challenging when you're talking about, again, just like the overall scale of energy disruption that you have. I mean, just to put it in perspective, what we're looking at here, just from a production standpoint. So remember, we're going to be 7 weeks this Friday, right?
Mm-hmm.
So
yeah.
So here's how the math works. If you are looking at this from the perspective of like annual energy supply, because I think this is an interesting way to look at it. Every 2 weeks, we lose about 575,000 barrels a day from full year energy production of around 100 million.
Yep.
So over an 8-week period, if you get there, you're talking somewhere in the ballpark of around 2.4 million barrels a day reduction. Just from that, you're saying even if everything gets back to normal immediately after, you've already reduced production by 2% for the year, no matter what. And so this is why, like, every week this goes on, like, it's just back building towards bigger problems. And again, they're showing up sporadically on the edges right now, but places like Taiwan are very much going to have questions about, hey, how do we get, the fuel for electricity and for, normal, shipping and transportation operations the longer this goes. It's going to become a problem at some point. I suspect not even does Taiwan Semiconductor have the money and the wherewithal to figure this out. I do suspect that the Taiwanese government knows where its bread is buttered also, and would basically say, look, in the absence of the amount of fuel that we need, we're going to try to curtail all other output on the island before we say Taiwan Semi can't run at full speed, because if that goes, that's such a huge portion of the economy that it would create problems.
Not to mention, anyone even quasi-allied to Taiwan has a vested interest in making sure that the country can continue to operate. We've got to take a quick break. Full market update when we return with Wall Street Watch.
Like us on Facebook and follow us on Twitter at TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your brand new guide, Todd, How to Leave Assets to Your Beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead, and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with, so it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living, and it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699. 5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
One day after both the S&P 500 and NASDAQ notched all-time highs, propelled by the tech sector, markets today are dipping into negative territory. Right now, the Dow is down 0.2% or 106 points. S&P 500 down only 6 points. NASDAQ down nearly 0.2%. Russell 2000 down over 0.25%. 10-year Treasury yield up 1 basis point at 4.289%. And oil up 2.5%, trading at $93 a barrel. Shares in Taiwan Semiconductor down over 2% despite the chipmaker reporting better than expected first quarter earnings and revenue. The company also raised its revenue outlook for the year due to strong demand for AI chips. Meanwhile, several media outlets reporting that Spirit Airlines could liquidate as early as this week, as the budget carrier has been attempting to climb out of bankruptcy but has been impacted by rising fuel costs. Elsewhere, beverage and snack giant Pepsi reported solid first quarter profit and revenue after the company cut prices by as much as 15% on its signature snacks earlier this year. In a bid to lure cost-conscious consumers, Pepsi stock is up nearly 3%. Abbott Laboratories cut its full-year earnings outlook, sending shares down by 4%. FanDuel parent company Flutter Entertainment downgraded by Citi, sending shares in the online gambling platform down by 3%. And after today's closing bell, Netflix will post their first quarter results. I'm Tucker Silva, and that is Wall Street Watch.
Mike, let's talk a little bit about a story that broke yesterday. Allbirds, the shoe company that wanted to be more than a shoe company originally, announced, hey, we are going to be more than a shoe company because we're selling off our shoes business and we're raising $50 million to get into renting out AI computer chips.
If $50 million seems impressive to you, it's impressive to me too, but I would ask you to keep in mind that at one point, this company was valued at some $4 billion with a B dollars. So if you're not familiar with Allbirds, they were the slip-on woven sneaker company that every tech bro in San Francisco needed to own during the 2010s. Few missteps here and there. They really failed to broaden out by any general range. They didn't sell via Amazon. I'm trying to remember like what other mistakes they made that really led them to this point. But boy, it's tough to look at this story and think about it in a way that doesn't indicate some sort of concerning top for AI.
Well, I don't think it's necessarily a concerning top because, again, like you see this like along the way, but it is a sign that like there's a frenzy there that is going to result in a lot of capital being destroyed because, as I said yesterday, like what does Allbirds do better at renting out data centers than anyone else who's bigger and already in that space? Like, why are you going to go to Allbirds over CoreWeave or Nebius or Oracle? Like, what's the thing that Allbirds is going to give you aside from a pair of shoes?
So I'm sure your mind went to the exact same place as mine did. But let's. Can you fire up the time machine, Tucker? Is that doable?
Mike. Not today.
Not today. All right. So there you go.
We haven't gone anywhere.
Height of the crypto craze. There was a alcohol company called Long Island Iced Tea, if you recall. And what did they decide to do, Chuck, to pivot their business model to become more in vogue?
They changed their name to Long Island Blockchain.
Yes.
And, they were going to produce the freshest, most drunkiest Bitcoin they could.
As far as I recall, it didn't really go much of anywhere, and I suspect that will be the result of this move too. And you're right; this doesn't speak to the top of anything, but when you have a shoe company telling you that they have the expertise to pivot into artificial intelligence, buying GPUs, and then renting them out on the cloud, if it doesn't cause you to pause, scratch your head, and wonder what we are talking about, then there's something going on in your head that just doesn't add up. This does not, as Chuck mentioned, a shoe manufacturer does not have any pre-existing expertise in data centers of any sort. And so this just does not click to me. No strategic advantage in the space. And with a $50 million head start, does not even really put you in a place where you can have a splash in the industry.
No, I don't know who. I just don't know who's going to call these guys. First of all, even before that, we know that all of these chips are like back ordered. Like you can't just like go to NVIDIA and be like, "Hey, you got any spare Blackwells lying around?" Like the answer is no, they don't. They're all being delivered. So my first question is, where are you going to get your supply from to begin with? The second one then is, okay, who's the person that calls these guys instead of anyone else who's been doing this for the last 4 years and actually knows what they're doing?
Why, like so many other questions too. Let's say you are the owner here and you are trying to make this pivot. Why are you even leveraging the brand? Take your money, walk away, and go start a new company that has nothing to do with Allbirds to try and do this. And maybe we won't be making such a big deal of it. But here's the most damning part of all this. The news of all this sent the shares in the company up 582%. Let that sink in for a moment here. A company that has no expertise in this whatsoever is taking $50 million to try and completely pivot their business to an entirely new segment from shoe manufacturing to AI data centers, and their shares skyrocketed 582% on the news.
As I said yesterday, look, it's okay to be a little frustrated on this. You can spend like years studying markets and building an investment strategy, and then someone slaps an AI at the end of, a name, and it goes up 600% in a day. You're like, okay, what's it all for, man? What's it all for?
It is moving down 24% today, but yeah, the 5-day return, according to my information here, has the stock up 400% over the last 5 days, with all of that coming during the day yesterday. So,
want to know the wild thing though? Despite all of that movement, the stock is at the same place it was at last June. Like, it just tells you how bad. I mean, again, this was a stock that was down. This was a stock that was down 99.5% from its peak. Even with this move, it's still down like 97% from its peak.
Yeah.
So it's. Again, I think some context and bigger picture is important on these things. And this is one where, again, I would be skeptical that we're sitting here 5 years from now being like, man, those Allbirds guys were right. They could do it. Now, their job is to prove me wrong. Okay? Sure. Like, again, they get a vote in this thing. They're going to see how they do. But there's really no there are no skills that translate from running a shoe company to running a data center company.
No, none that I can think of. The interesting question to me now is, what other publicly traded company that has nothing to do with technology, chips, GPUs, or anything else is going to see this and now pivot over to AI data center build out? Because somebody's gonna.
I mean, even just within the footwear space, you've got a few. Under Armour's been in trouble for a while. Yeah. They're more, athleisure apparel. Let's talk a little bit about Nike.
Yeah.
Nike stock is down almost 50% from its peak last year. Do they change their name to Nike?
No,
or something like that?
I've got the perfect one. Stock price follows almost the exact same pattern.
Beyond Meat?
Peloton Interactive. Take all that excellence you have in manufacturing really expensive stationary bikes, you build out data centers.
do it with Beyond Meat. You've
Yeah.
got, hey,
Yeah.
you know what? We're beyond AI.
Uh-huh.
We're what's next after AI. We're BI. You know,
I would argue that Beyond Meat is even further away from AI data centers than Allbirds or Peloton. So that would be the ultimate, I guess.
I don't think it is. I actually think Beyond Meat, if like you think about what they have to do, they at least have to do like some chemistry or something, right?
In a lab, yeah, I guess so.
You know, like there's something in a lab somewhere. It's not just, you know, shearing sheep and stuff like that.
What about Spirit Airlines? Spirit AI? There you go.
Spirit Airlines. You know, actually, no, you've got it right in airlines. Yeah, you're right, Tuck.
Yep.
Yeah, they could
delete
they could
the planes.
Don't delete them, Tucker. Flying data centers. You know.
Yep. That's the way to go.
Yeah, you could walk in your Allbirds on a flying data center. That's the future. This is where we are in 2026.
Yeah.
Let's take a quick break here, and when we come back, I know we're supposed to talk about the Fed. Do we have to?
No, we don't have to. Let's say the Fed. The Fed talk is important. Can we talk about my favorite discount airline next when we come back from the financial exchange?
I'd love to.
Spirit is up next. We'll be right back.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Register today for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. If you're not able to participate, you can still support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
Well, potential bad news for those of you flying over the course of the next few weeks on Spirit Airlines. Bloomberg seemingly got the hint of this first, but reports all over the place now that Spirit Airlines, which is currently in bankruptcy for the second time in a couple of years, could begin liquidation as soon as this week. Now, these are, Spirit Airlines comments as we don't comment on market rumors and speculation, and these are all, these reports are all, on the condition, spoken on the condition of anonymity. But the airline itself was a target of acquisition for JetBlue. Chuck, was that last year, 2 years ago? Say again?
No, this was like 5 years ago when they first started the bid. I think it failed 2 years ago, and it's basically been downhill for them since.
So this was actually the warning that Spirit Airlines gave to the judge and the Justice Department in the case is, look, we don't think we can survive on our own, and we may re-enter bankruptcy if we're not able to combine with another airline. Justice Department or the judge or somebody seemingly didn't buy that argument, and they re-entered bankruptcy, Chapter 11 bankruptcy last August. And I think what's happening here is pretty plain. This is a company that was already financially struggling, figuring out how to make deals with their creditors, and probably didn't have a whole lot of cash in order to hedge against really high jet fuel prices. Most airlines have dramatically, walked away from a lot of their jet fuel price hedges. And now suddenly Spirit Airlines is sitting here saying, okay, as is the case with my mother-in-law, who has a seat on a booked flight this coming Saturday that I booked for her, so that could be an awkward Thanksgiving conversation. Hey, this person booked their ticket for whatever, $200. Can we actually profitably operate this flight and flights for the next few weeks on the margins that we have here? So we will see. This is all rumors at this stage, but pretty much every major news outlet reporting it at this point. And I just, on a personal level, Mayor, if you're hearing about this for the first time from listening to the Financial Exchange, sorry, we'll get that one sorted if you show up to the airport and happen to liquidate right in front of you. I'm just picturing a vision in my mind where she's on the tarmac and the lights just go out and the pilot goes on the cockpit. Pilot goes on the microphone and just says, "Hey, sorry, company's belly up. We're out of here. Figure out your next flight on your own."
Pilots hop off. Everyone else is still strapped in their seats.
Yeah, I'm just thinking about that scenario where the pilots and the flight attendants just, blow out the door and slip down the slide and leave all the passengers stuck on the tarmac with no idea what to do. That's not how liquidations actually work, but when they do happen, they can happen really quickly. And
what if it happened mid-flight?
I would imagine you've got to, I would imagine you got to land the plane, right? You don't just bail out mid-flight, I would think. Yeah. But yeah, this is, not horribly surprising given where Spirit Airlines has been over the last few years, but I have to say kind of disappointing. Yeah, I'm generally not in favor of big companies combining, but when we talked about the JetBlue Spirit merger, right, these were, what was it, like 5 and 8 in terms of passenger volume combining here to make an airline that still would have been smaller than even Southwest. And,
yeah, I mean,
I don't know.
The big problem is that in the previous decade, you had allowed the Delta Northwest merger, you had allowed the United Continental merger, you allowed the American US Air merger. And so once those happened and the economics changed, the smaller guys couldn't compete anymore. And so ultimately, if you were going to allow those ones previously, you don't suddenly get to turn around and be like, well, now we're going to be serious about antitrust. Well, okay, you're going to unwind those other ones? No, you're not. And so this is the problem. And now you've got the
United,
what was it that came out
United American.
So I have a theory on that.
Hit me.
Not going to happen.
I hope not. I mean, it would make...
It would
like, combine one and two.
Antitrust problem. It would be, you're talking about 40% of all domestic air travel being held in one company. I don't think there's the appetite for that. But I do want to take you back about 5 or 6 years where, coming out of the pandemic, United and JetBlue had a little partnership allowing each other. It wasn't a merger, but they allowed each other's frequent flyer people to, exchange points across platforms and buy flights on each other's networks and things like that.
Yeah, they called it marketing each other's flights. Yeah.
Yes. I wouldn't be surprised if the company that failed to buy Spirit is being looked at by United. And, United saying, we want to buy American. Think about it from a negotiating perspective. Okay, you make this big outlandish, push it first. And then it's, well, actually, we really just want JetBlue. Because they already have that relationship from the past. And I wonder if it's just, hey, we'll make the ridiculous ask at first so that us buying JetBlue seems more realistic when we finally say that's what we want to do.
Again, it just seems to me that we focus all of our antitrust cases on the wrong problems. We'll talk about
publishers or office supply stores.
JetBlue and Spirit, you can't merge, but Google, you can have 90% of search traffic, and we're not going to do really anything about it other than tell you you're a monopoly.
Right, we'll find that you're a monopoly.
But we won't do anything.
We just won't impose any penalties or costs because you promise that you'll be better in the future.
So I hope Spirit does not go out of business. They occupy an important spot. You're consistently offering flights below mainstream carrier prices, but it's not looking good at the moment. We've got to take a quick break, but a lot more to cover in the second hour of the Financial Exchange. We'll be right back. Stay tuned.
When it comes to estate planning, many families focus on taxes. But understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
One of the most helpful things you can do for your family is to make sure that important information about your life is organized and easy to find. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Financial accounts, legal documents, and insurance policies are all part of a complete financial picture. When that information is scattered scattered in different places, it can be difficult for loved ones to step in and help if a crisis occurs. Our new guide called Building Your Emergency Financial Binder will show you how to organize the most important details of your financial life, including key contacts, retirement plans, investment accounts, and insurance information. Call 800-393-4001 and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's DAV5K.Boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right, you can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, yeah, the asset would avoid probate. But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditor. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return, number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated.
This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Good morning. Welcome on back to the Financial Exchange. We've got markets in a holding pattern here as we open up the 11 o'clock hour. The Dow is just about flat for the day, off 9 points. The S&P up 7, and the NASDAQ up 26 after a pretty big rally that led to S&P closing up over 7,000, hitting fresh record highs here. So bit of a holding pattern, as I mentioned, and we continue through earnings season as we head into next week, especially, but we'll have Netflix and others who have reported today. Oil prices moving slightly up on the day, but well off of their recent highs. $93 a barrel for the May contract on West Texas crude, and the 10-year Treasury about flat for the day, just below 4.3%. When we take a look at gas prices on the national average, we're down about 7 cents from the week ago price. We're sitting at $4.09 a gallon on the regular for the national average. And on the 30-year fixed rate mortgage here, we are now sitting 6.3%. So, Chuck, we're getting back within spitting distance of the pre-war mortgage rates, at least. We're well above, obviously, pre-war gas prices. But on that 30-year mortgage, we're 0.3% away from where we were prior to the breakout of conflict. Anything else catching your eyes this early in markets, Chuck?
No, I mean, I think it'll be interesting to see where, again, It's going to depend on what happens in the next couple of weeks. I know markets continue to want to look at this as a short-term interruption to energy flows and other flows through the Middle East. That may end up being proven right. As of right now, there still is no meaningful shift that's happening. And so, again, something has to give here. You either need to get Hormuz opening soon, or stocks are going to have a hard time kind of maintaining this as we go. That's kind of where the rubber meets the road. We did in terms of like what we're starting to see, just as an example. So again, the Australian Prime Minister this morning announced that they had secured 10 million liters of diesel, which is basically like 1 day's supply of diesel for Australia. So like these are the kinds of announcements they're making. In Pakistan, you've now moved to rolling blackouts in order to keep the lights on. KLM, an airline out of Europe, just announced 160 flight cancellations for the next month. It's only about 1% of their total flight capacity, but they basically said, look, these routes are not, it wasn't a jet fuel shortage issue is not what they're saying, but they're saying these routes are not profitable at these prices, and so we're not going to run them. So these are the things that are starting to pop up. Just, again, small little things that are, around the edges. And again, ultimately, it's not to diminish what, Pakistan's going through in terms of rolling blackouts and things like that. But Pakistan going through rolling blackouts is not going to impact the world economy, as uncomfortable as it might be for the people who live in Pakistan. But these are things that weren't happening 2 and 3 weeks ago that now are happening today. And every day that we go on, you're going to see more and more things popping up. The question is going to be, when do we get a relief so that this air pocket has, that room for improvement on the back end? Because if it doesn't come soon, these are going to move from just incremental edge case situations to larger ones now that the last ships from the Middle East have made it to Europe, and there's no more supply coming until that gets, reopened, basically. So this is the expectation for the next month is you're going to hear worse and worse news coming out from more parts of the world regarding energy supplies. The market is saying, okay, we can deal with things getting worse for a month as long as after that month there's a path to things starting to get better. I think if this goes on too much longer without traffic through Hormuz, the market's going to have a more difficult time looking through it. But it's a perfectly logical reaction given the ceasefire that went into effect last week and the hopes that that will lead to progress on actual transits. But eventually you got to see that progress on transits. Otherwise, this is going to become problematic here.
Speaking of shortages, the IEA chief, the International Energy Administration, tells the Associated Press that Europe would be running out of jet fuel in as few as 6 weeks from now. That was after a industry group in Europe had been warning about it over the course of the next 3 weeks. So in any case, speaking to that real shortage of fuel in different parts of the world. Next week, in terms of important earnings to keep an eye on, amidst the White House's call to ramp up defense production, GE Aerospace will be reporting earnings Tuesday, as will Raytheon and Northrop Grumman. We have United Healthcare going next week as well. Wednesday, after the bell, we'll be hearing from Tesla, Lam Research, IBM, Texas Instruments. We'll hear before the bell on GE Vernova. Remember, GE split up into 3 separate companies 3 years ago? Somewhere in that time frame. Philip Morris will go as well. And then on Thursday, we'll be hearing from Intel, Amex, Thermo Fisher, and a few others. So, really heating up in terms of earnings next week. And then over the next several weeks, we'll be hearing from the giant tech conglomerates. Chuck, has the era of the mega layoff arrived? What precisely does the Wall Street Journal, what are they even asking with this question? Because we've seen a couple layoff announcements that have been abrupt and rewarded by shareholders, and yet we're not seeing anything move in terms of unemployment or weekly jobless claims. So is this all overdone?
Yeah.
Good.
Here's the thing. So you get these big layoff announcements that have been made where Block, formerly known as Square, said, hey, we're going to lay off 40% of our workforce. And Oracle's laying off thousands of people. And Amazon said that they're going to cut 30,000 people. There's rumors of Meta coming forward with some big layoffs soon. And I get that these headline numbers are flashy, but the thing that you have to remember is that in any given month, when you look at the data from the Job Openings and Labor Turnover Survey, the JOLTS report that we cover on a monthly basis, if you go in and take a look at the actual underlying data in there and say, okay, like what are we seeing in terms of, layoffs on a monthly basis? Depending on the month, you're talking like anywhere from like 1.7 to 2 million layoffs in any given month. Okay. And so ultimately, these big announcements, like, yes, they might move things on the margins. The concern that you have is the one that I've voiced previously, which is I'm a big believer that most CEOs are corporate lemmings. They don't really do anything they don't want to step out of line. They don't want to do anything too risky because most CEOs are pretty risk averse, actually. CEOs don't like taking big risks. They like to know that what they're doing is going to be successful before doing it. And so I do think that if you see more and more companies that are being rewarded for larger layoffs, I do think a lot of CEOs sit back and say, these companies laid off X percentage of people and their stock went up by Y. Hey, maybe we should look into doing that. And maybe at some point it does cause like a tipping point problem as far as, too many layoffs in one fell swoop. But the layoffs that have been announced, again, you look at initial jobless claims, there's nothing doing there. Continuing jobless claims, nothing doing there. Layoff rates through the JOLTS, nothing happening. Separations, nothing happening. You go through job openings. They're not, declining. They're basically where they've been for the last 6-7 months. You talk about overall hiring rates. They haven't really changed in a year. So I'm very much of the opinion that, these things are making news, but they're not actually making any structural changes to the U.S. economy. And that's what would get me concerned is if you started seeing something like that popping up. But you're just not right now, quite honestly. Right. And hiring remains sluggish by most metrics. Maybe there's some green shoots here and there, but ultimately, it's not something where I see the labor market falling apart right now. It's really found its footing to not deteriorate further in the last 3 months.
Yeah, I think there's that open question of, hey, will future companies be able to reduce headcount legitimately because of AI? Or even if they can't, can they reduce headcount, claim because of AI, and see their stock price rewarded? And if that begins to become a phenomenon, then I'm with you. You could see more CEOs pushing in that direction. But to this point, nothing that I think you can point to that is concerning for the state of the overall labor market.
I have one other thing that I want to add on that, just an anecdote from someone that I talked to whose company is using lots of AI. Because this is the piece that is going to end up mattering. So initially they set their AI budget at 5% of their headcount, saying, okay, if we're spending, just as an example, $100,000 a month on headcount, we're willing to spend $5,000 a month on AI.
Okay.
They're now at the point 3 months in where they're spending around 15% of headcount budget on AI with no reduction in headcount yet. He thinks that they are going to end up getting to a point where by the end of this year, they're spending almost as much on AI as they are on headcount. And to which you say, okay, what does this actually mean? Because if they can't actually reduce headcount or can't reduce expenses through the use of AI and instead it's just another expense.
You need more revenue. You need more sales.
There's far more limited room to do that. The whole premise of AI is I can spend a little more and make my team more productive, or a lot more and get rid of a lot of my team. There's not really a great path to, hey, we're going to have another line item on our expense, ledger that is looking anywhere close to what we spend on employee salaries, like employee compensation. So we'll have to see how this works out because again, it's clear that companies that are starting to dive into using AI in big ways are finding that they just want to spend more and more because they are seeing positive effects. But the problem is they're not seeing big enough effects where they can lay people off. I know that's not a problem for the employees, but there's only so much money to go around and eventually something has to give. either the AI budget or the employee budget.
We shall see. Let's take a quick break. When we return, playing a little bit of trivia here next on the Financial Exchange, and then a showdown coming for the Fed chair. Kevin Warsh heading towards Senate confirmation hearing. That's next on the Financial Exchange.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network.
One of the most helpful things you can do for your family is to make sure that important information about your life is organized and easy to find. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Financial accounts, legal documents, and insurance policies are all part of a complete financial picture. When that information is scattered in different places, it can be difficult for loved ones to step in and help if a crisis occurs. Our new guide called Building Your Emergency Financial Binder will show you how to organize the most important details of your financial life, including key contacts, retirement plans, investment accounts, and insurance information. Call 800-393-4001 and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When it comes to leaving assets to your family, simplicity isn't always the best approach. Cushing & Dolan are experts in elder law, and their new guide is called How to Leave Assets to Beneficiaries. Adding children as joint owners on accounts or property doesn't guarantee you can avoid probate. It may create serious unintended consequences. In this guide, you'll learn why leaving assets to your children may not always be the best plan. The guide also explains how trusts can be used to stagger distributions over time, help protect assets from creditors or divorce, and ensure your family receives your inheritance in a way that makes sense for your personal situation. Call 866-848-5699 right now and ask for your free guide, How to Leave Assets to Beneficiaries. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange. On this day, back in 2003, the Treaty of Ascension was signed in Athens, Greece. The treaty allowed for the admittance of 10 new countries to the European Union. So our trivia question, how many countries are currently in the EU? Once again, how many countries are currently in the EU? Be the second person to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you'll win a Financial Exchange Show t-shirt. Once again, the second correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
All right, Chuck, it's Fed Talk time because Jay Powell's term is up in 4 weeks. We have got an ongoing investigation from the Justice Department into Jay Powell and his alleged misuse of what is the allegation, really? Just mismanagement of funds regarding the building construction? We also have a Senate confirmation hearing that's finally been scheduled for incoming Trump pick for Fed Chair Kevin Warsh. And then finally, on top of all of that, you've got Republican Senator Tom Tillis saying that he intends to block the vote for Kevin Warsh for Fed Chair so long as the investigation into Jay Powell continues. So with this sort of thing, I tend to think it still gets resolved. But what are the deadlines we're heading towards here? And I mean, the big question is what would happen if Kevin Warsh can't get through nomination and Jay Powell's still sitting there?
Yeah, no one really knows for sure because we've never had this situation before.
There's no there's no real rules sitting down for what happens if you don't get a new Fed chair confirmed and the existing one's still sitting there but his term's up.
Right. We've seen instances before where there's been like reasons why. I forget when it was, which chair had to stay on a little bit longer, but it wasn't like a contentious thing. It was just one of them previously had to stay on for it was a very short period, but they did have to stay on after their term had expired. And so the question here is, look, Powell's basically said back in March that if there is no successor confirmed, he's going to stay on as a temporary chair in that absence. The White House put out a position this week basically saying, no, if there's no successor confirmed, then Powell shouldn't continue as chair, and maybe it's someone else who's on the committee that would take up the chairmanship at that point. So I have no idea what's going to happen here, but we are now a month away from that deadline, and Warsh's first hearing is now set for about a week or so from now, and there's no guarantee he's going to be confirmed by then. So potentially you've got some drama that's going to come up in a month.
Yeah, you kind of had an opening for the Trump administration to walk away from this, right? You had the court strike things down, and could have, with everything else going on in the world, I don't think anybody would have blinked an eye had the Trump administration just kind of pushed this to the side in order to get their guy in. But the president has been pretty public saying, I want these investigations to continue. And so it doesn't seem like that's going to happen in the short term. Meanwhile, beyond just the role of chair of the Federal Reserve, Jay Powell's been playing his cards pretty close to the vest in terms of his intentions, even if the investigation is done and even if his term is over. He has is it another 2 years that he could hypothetically serve on the Federal Reserve, just not as chairperson. And he's also said, hey, I'm not willing to step down and let the board go without a chairperson. So, yeah, he's playing his. Again, would it be very surprising to have Jay Powell stay on at the Federal Reserve if Kevin Warsh is confirmed and everything else is still going on? It would be. But he's not exactly letting up and giving a clear path here to say, yeah, this is what I will do. So, yeah, could be some fireworks coming up. I tend to think that usually with this sort of thing, negotiations happen, it gets resolved, and we move along. But we're getting a lot closer to the turnover than I expected we would.
Yeah, I mean, I'm still not really going to get excited about this until we're right up against the deadline, because as we've seen in multiple instances, like you get up to those deadlines and you get some movement that happens. We're still a month away. A month is kind of an eternity when it comes to Congress.
True.
You know, a month is both an eternity and no time at all. In that Congress moves very, very slowly until there's a deadline, and then they move through very quickly to the point where you're not even entirely sure what happened until it's done.
True. Quick break. Markets have turned to the positive. We'll have a full recap for you next, as well as the trivia winner after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Building Your Emergency Financial Binder. Mike, when we talk about the type of information that should be in there, what kinds of things should people be including so that a loved one or family member can help to keep their finances in order?
Yeah, I think, on the financial side, it's what do I have and where is it?
And how do I get access to it?
Right, and so that can mean getting access to online passwords and things along those lines, but obviously how you share this stuff is extremely sensitive given the threat to being breached down the road. And so mainly it is, though, what is the snapshot of my financial, health, and legal life? And how do I format it in a way that people can actually interpret it?
And I think another piece there is that is also always changing. How do I let people know what changes I've made and when I've made updates to it? Because I might not have the same accounts that I used to.
Right. And the guy does lay that out of, hey, how do I document changes in here? Because you might not always have that old account at said financial institution. It could change. It could shift. You might retire. And keeping this thing up to date is critical. Obviously, the more stuff there is out there, the more complicated this becomes. And so as much of it as you can check off the list while you're still around and able to explain it is extremely helpful.
The guide, again, is titled Building Your Emergency Financial Binder, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. That phone number again is 800-393-4001, or visit armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
After the S&P 500 and NASDAQ notched all-time highs yesterday, markets today are now modestly higher. The Dow is flat, only off by 32 points. S&P 500 up over 0.1% or 10 points higher. NASDAQ up about 0.25%. Russell 2000 is up nearly 0.2%. 10-year Treasury yield up 1 basis point at 4.293%, and oil jumping over 2% higher, trading at $93 a barrel. Shares in Taiwan Semiconductor down over 2%, despite the chip maker reporting better than expected first quarter earnings and revenue. The company also raised its revenue outlook for the year due to strong demand for AI chips. Meanwhile, several media outlets reporting that Spirit Airlines could liquidate as early as this week, as the budget carrier has been attempting to climb out of bankruptcy, but has been impacted by rising fuel costs. Elsewhere, beverage and snack giant Pepsi reported solid first quarter profit and revenue after the company cut prices by as much as 15% on its signature snacks in a bid to lure cost-conscious consumers. Pepsi up by 2% after soaring more than 582% yesterday due to its pivot to an AI infrastructure. Allbirds stock is now retreating 29% today. And after today's closing bell, Netflix will post their first quarter results. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question, how many countries are in the European Union? That'll be 27. Tom in East Longmeadow, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Tom. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Chuck, according to Redfin, large homes, which they define as 3+ bedrooms, owned by empty nest baby boomers, account for about 28% of the total national supply of those large, again, 3-bedroom single-family homes. Redfin published that a few weeks ago and found it relevant to this next story of retirees obviously wanting to age inside their homes. And I don't know that this marks a significant difference. I think, obviously, every family is different. My grandparents retired and sold their home in New York, moved out to Arizona, bought a 2-bedroom home on a golf course, and that was their retirement dream. But I'm honestly seeing less and less of that these days, and more often than not, we are seeing older Americans choose to stay in their homes for a litany of different reasons that they are more comfortable in those single families. What's been your experience when talking to people about why they're so focused on staying in place and aging in place?
So I think one of the reasons is actually a large number of them don't necessarily want to stay in place, but when they look around at the homes that they would like to buy, generally something that is smaller, fewer stairs and things like that, maybe less maintenance, what they find is the difference in price isn't that significant, or in some cases, the price actually might be higher just because there are so few of those homes available and there's so much demand from baby boomers.
Yeah.
And so I think one of the reasons is people look out and they say, hey, like, I think I could sell my home for $450,000, but to downsize into that, other situation, it's going to cost me $400,000 plus then I'm going to have a condo fee, tapped on top of that. And so they say, no, it just doesn't make sense for me because of that. And so even for a lot of people who might want to find a different place to move to, it either doesn't exist in their area or the pricing is not matching up with what they're willing to spend on it.
Yeah, and I think that other piece there that you mentioned, right, that condo or association fee, the idea for a lot of people of going from single family to sharing a wall or sharing some other features of a condo is not appealing for a lot of people, and that supply of 2 to 3 bedroom single family homes is almost non-existent in parts of New England. But I do feel I do agree with Market Watch in one item here. I oftentimes hear people say, oh, I looked at this condo and we loved it, but the association fees are just so expensive. And I do have to take a step back and remind them, like, listen, guys, I know you're in your 60s now, but fast forward 15 years where you're living in that home. Do you really think you're going to be maintaining your 2-acre lawn and climbing on a ladder to clean the gutters and replacing all the light bulbs in your home? Because if you aren't able to do so, all of a sudden that monthly condo fee looks pretty darn attractive compared to the cost of outsourcing all that work.
Yeah, I totally agree.
The other pieces that get underappreciated, right? Oftentimes we talk about the need to redo a bathroom or, hey, the laundry's down in the basement and, I'm in my 80s now. I feel nervous going up and down the staircase. I need to put in a lift in order to get me upstairs. There can be significant costs to aging in home, just as there are significant costs to potentially moving too. And many retirees are facing this, decision point of, hey, what makes sense? Maybe I've got a mortgage still on that home and it's locked in at a good 3% or under, right? That's a huge incentive to stay right where you are. If you're attempting to evaluate where it is that you are going to retire and what type of home you're going to own and what is really a priority for you, along with what can you actually afford to do in retirement, these are the types of questions that, believe it or not, financial advisors work with their clients to answer every day. I know everyone tends to focus on, hey, what do I do with my 401k? How do I invest more efficiently? But these types of questions are so impactful to folks' happiness and success in retirement that it has to be a focus of your overall financial planning. And if you have those questions too, please give the folks at Armstrong Advisory Group a call. The number is 800-393-4001. You can go online to armstrongadvisory.com. If you're driving now, need a time for us to call you back. But that number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
So while I acknowledge that I just got done poo-pooing antitrust cases and what the Justice Department's actually successful at breaking up, I'm going to applaud this one as Live Nation has been found to have illegally monopolized concerts and ticketing, according to a jury, paving the way for more than 30 states to seek all sorts of measures against Live Nation. So Live Nation, owner of Ticketmaster, obviously, Chuck, but I feel as though you have more background on all of their other business arms than I do. Where is the space that Live Nation really occupies in the entertainment venue today?
Before going there, I do want to say you buried the lead on this. The Justice Department settled its case a month ago. This was something that there were, again, these states could continue to pursue it, and they decided to. But the Justice Department said, no, we're not interested in doing this anymore.
So the states went after it. Yeah.
Well, the states were involved. They were partners with the Justice Department on it. originally. So here's the deal. Is basically what you have is back in 2010, Live Nation, who is a concert and other event promoter, merged with Ticketmaster. And so basically you ended up with one entity that for large venues, think sports stadiums and things like that, big amphitheaters, they control in some estimates about 70% of the market for ticket sales, artists attending them, venue management, like the whole thing, like basically the whole act of putting these on. And so you obviously end up in a situation that's pretty anti-competitive as far as what they're required to pay out to vendors, because there's no competition that can come in and say, hey, we have better terms. Again, they, in some situations, like even own certain venues. They're the ones who sign the contracts with the artist in terms of how much they get paid out. They set ticket pricing, like the whole thing. And so they were found twice, I think, to be in violation of the terms of consent decrees that they had to sign in order to get this deal done, basically saying, no, we won't do X, Y, and Z because we realize that's anti-competitive. And they kept violating the terms of it. So I generally am a big believer that, hey, if you violate the terms of a consent decree that is in place for your merger to take place, you should have the merger unwound. The Justice Department, moving on from that, says, okay, like, you're not going to have that happen here. But basically what you're going to see here is that states can effectively try to go after some of these anti-competitive businesses and again, try to, recoup losses for various different groups here. So you've got a situation where, based on this jury's finding, you've got consumers that are going to be able to receive some damages. It's unclear. I mean, this is going to be appealed. The exact amount's going to, change in this and that. But it is something where ultimately I do think that this is a huge missed opportunity, because the DOJ could have had the ability to do far more than this in terms of unwinding that merger, but there's still going to be something that can happen at the state level from this, at least.
Let's take a quick break. When we come back, a little bit of Stack Roulette coming up next.
Follow the Financial Exchange Show on Instagram and see what's driving the conversation about Wall Street and economic trends. This is the Financial Exchange Radio Network. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Get real-time financial insight as news breaks. The Financial Exchange is live on X. Watch the show and follow us for the most up-to-date business news you need to know. This is the Financial Exchange.
Well, tomorrow is the Money Matters mailbag. It's your chance to ask Chuck and Mike any questions you might have about the economy, markets, life, anything like that. So if you want to give the guys a call and leave a voicemail for the Money Matters mailbag, all you have to do is call 339-399-4333. Once again, Money Matters mailbag phone number is 339-399-4333. Or if you're shy, you can email us to tfeshow@gmail.com. Once again, that email is tfeshow@gmail.com, and we may use your question on the show.
Time for a bit of stack roulette here, Chuck. I'll kick things off with Dairy Queen, who is following the suit of several other fast food restaurants testing out some AI in the drive-thru lanes, which, again, should be some low-hanging fruit, but we will see how it goes, because I think it was Wendy's or Taco Bell that tried to pull this off, and people pretty much immediately found ways to take advantage of it and screw up the system, which is probably what I would do. For instance, ordering something like 11,000 cups of water or 600 ketchup packets, and the AI just has no idea what to do with any of that information. I ran into another... I mean, it's now all over the place, but I called DocuSign yesterday because of an issue and was dealing with their automated customer service bot, and they are getting better, but 9 times out of 10 when I'm running into them, I end up 30 seconds in just saying, please get me a representative, because you trying to walk me through how to fix this on my own is not getting me anywhere with this. So we'll see if Dairy Queen is any more successful than some of their competitors in rolling out this new automation technology. I think certainly it's coming, and in most cases, it can handle these orders just fine. Chuck, what do you have for us? Oh, sorry. Go ahead.
I've got Live Golf. Tucker and I were talking about this before the show yesterday, just because there were all kinds of rumors going through Twitter about, hey, is Live Golf about to go under? Or not. And it got to a point where now you have the Wall Street Journal with this piece titled Live Golf Facing Imminent Closures, Saudi Backers Way Pulling Funding. Remember, Live is the competing golf circuit to the PGA Tour that was founded back in 2022 and has kind of ended up forcing some major changes to the PGA Tour in order to for them to kind of improve what they're offering their players. But you ended up with the Live Golf CEO sending out an email that Yahoo Sports ended up getting their hands on somehow.
Yahoo Sports exists?
Sure.
Oh, yeah. Tucker will tell you, like, for the last 15 years, until recently, Yahoo Sports actually did some of the better investigative sports journalism out of anywhere on the planet.
Tucker, will you tell me that?
I will.
Oh.
Off air, though.
Okay.
Today it's different, but I want to read part of this email, and you tell me what this sounds like, Mike. This is from Live Golf CEO Scott O'Neill to the staff. I want to be crystal clear. Our season continues exactly as planned, uninterrupted and at full throttle. While the media landscape is often filled with speculation, our reality is defined by the work we do on the grass, and we are heading into the heart of our 2026 schedule with full energy of an organization that's bigger, louder, and more influential than ever before. The life of a startup movement is often defined by these moments of pressure. We signed up for this because we believe in disrupting the status quo, and we faced headwinds since the jump, and we've answered every time with resilience and grace, and now we answer by doing what we do best, putting on the most compelling show in sports. Lean into this moment. The noise you hear is simply the sound of a movement that is working. Embrace it. We are pioneers, and while the road isn't always smooth, the destination is worth every mile.
And this was before, after, or during the Saudi announcement? It sounds like a panic email trying to retain staff that are probably...
It's Kevin Bacon in Animal House.
Yes, this came out yesterday. It's that.
Yeah.
Yes.
Yeah.
You know, any time that you hear, like, you know, the noise you hear is the sound of a movement that is working.
Yeah.
Oh, I didn't even read the best part, actually. This is the ending. Let's go out and show the world why Live Golf is the future of the game. It matters. You mattered. Why would you say you mattered in past tense?
I mean, it's a typo, but yeah, that's it's not great.
So that's the kind of email that you put out when you're trying to get your staff not to quit because you're about to just close up shop.
Yeah,
and I'll say this, Chuck. Did you happen to see Sergio Garcia's temper tantrum at Augusta at the Masters over the weekend?
I did. He broke his driver head, right?
Yes. So he hit a drive, which actually didn't look terrible, and then he smashed the ground a couple of times out of frustration. Then he took his driver to a bench. Again, this is at Augusta, where you're not supposed to act like that whatsoever.
No.
Broke his driver, and then he proceeded to carry John Rahm's golf bag with him. Have you ever seen Sergio Garcia act like that?
No.
No. So this has been, I think the players knew about this happening, yeah.
To be fair, I couldn't pick Sergio Garcia out of a lineup, so.
There's rumors that, like, players haven't been paid in the last several weeks and stuff.
And Bryson looked distracted. John Rahm looked distracted. They didn't look very much into it. Yeah. I think it's pretty telling.
It's shocking because everybody always says trust the Saudis.
Tucker, correct me if I'm wrong. That he broke his driver. It was on the second hole, right?
I think it was. Yeah, it was early.
Which means, remember, by the rules of golf, if you break a club due to, like, non-playing actions, you're not allowed to replace it. So he had to play the rest of that round without a driver.
Yeah, it's like Tin Cup, right? And that happened in Tin Cup. You had to play with a 7-iron or something the rest of the round.
Yeah, so it's, there's that.
Top-notch stuff. As we close out the show, President Trump claims that Israel and Lebanon have agreed to a 10-day ceasefire. Markets moving up as we close in on the noon hour with the NASDAQ up 0.4%, S&P up 0.3%, Dow Jones Industrial Average up 82 points or closing in on 0.2% here. That's all the time we have for the Financial Exchange today, but don't worry. Be right back tomorrow. Have a great rest of your day, folks. Stay tuned.